How big is the current stock bubble? How about the second biggest stock bubble of the past 100 years? That's the conclusion of veteran market technician Eric McCurdy, senior market technician for Prometheus Market Insight. Based on current price-earning ratios, he's quoted as saying, only the peak in 2000 during the dot-com bubble created a more overvalued market than the current one. The S&P 500 is up a blistering 240% from its March 2009 lows, yet the overall economy creeps along at half steam. The recovery, such as it is the weakest since the Great Depression. What accounts for this discrepancy? Is it the Fed? If you think it is, you've probably been reading a lot of Jim Rickards as well as David Stockman. And you'll also be right. McCurdy is quoted as saying, those gains have been fueled primarily by the Federal Reserve and its regular stimulus policies, by holding short-term interest rates near zero for 7 years. The Federal Reserve has encouraged malinvestment and speculation, creating massive market distortions and imbalances. Does he say when the bubble meets its inevitable end? No. No one can say precisely. We know one brilliant analyst who predicted to the date, hour, and minute 11 of the past two crashes. In the famous words attributed to John Maynard Keynes, the market can stay irrational longer than you can stay solvent. But McCurdy says, at a current duration of nearly 8 years, the latest cyclical top is long overdue and could form at any time. Julian Emanuel is a U.S. equity and derivative strategist at UBS, from whom he's quoted as saying, the wall of worry, which has supported stocks for 8 years, has been given way to a deep sense of hope and optimism. Optimism? Isn't that good? Not always. The S&P has gone 70 straight sessions without a single fall of 1% or more, and it's working hard on 71. It's the longest streak since 2006 when it hit 94, according to CNBC. And you can remember what happened in 2007-2008, warns Boris Schlossberg of BK Asset Management. Indeed, we can. More, there's definitely some sort of storm coming. I don't know if it's going to be mild or more severe, but it's almost impossible to believe that we're just going to have this calm for much longer. Something's going to trip the markets and there's going to be some type of correction. But what exactly? China goes for a max devaluation of the yuan, perhaps? Many think China could do it soon. The market saw double-digit corrections the last two times China devalued a few percent in 2015 and 2016. What would a 20% devaluation do? Maybe something happens with Russia, or maybe the media dig up something on Trump that roils markets, or the Fed botches its way into another crash. Whatever it is, the experts will probably miss it and then explain afterward how obvious it was at the time. And here's a prediction, sure as sugar. They'll try to pin it all on Trump, even if he had nothing to do with it at all. The establishments, the globalists, the media all loathe Trump with a passion verging on lunacy. And what would be a better way to discredit him and all those slum-toothed, gun-touting, bear-swilling deplorables from flyover country who put him in office? Their cry will be this. See what happens when those know-nothing, anti-globalist populares are allowed to call the shots? If we were in charge, none of this would have happened. Many people will believe them. Then the elites can resume their places atop the pyramid, and the rest of us can resume our places far beneath at the bottom.